Oliver, what a surprise. We're sitting here talking about Marks and Spencer. We're talking about a big miss, and we want to know whether there's going to be a turnaround story in the offing. One of the worst sales misses for a few years from M&S this morning. What went wrong?
Well, pretty much their like-for-like sales from that same-store sales, particularly in the clothing business, been pretty awful, down 7% in the first quarter. Two things went wrong, really. Firstly, the rain happened. M&S, like every other retailer, stocked up on t-shirts and hats and flip-flops for the summer. No one wanted to buy because of the rain, but that's only part of the story. They've also had what they refer to as a merchandising issue, which is actually a stocking issue. They didn't buy in enough of the popular lines, so when people came in and decided what they wanted, M&S didn't have enough of that on the shelves, and they had an awful lot of what people didn't want. The result is like-for-like sales are down.
And what do they say they're going to do about it this time?
Well, this time they've overhauled the management in the clothing business. Kate Bostock, who has been head of clothing, she's gone. She's been replaced by John Dixon, who's coming across from the food business of M&S, and also by Belinda Earle, who used to run Debenhams and Jaeger and Aquascutum. John Dixon will run the business. He'll be the M&S brains in it. Belinda Earle's come in to try and sort out the fashion and the style and make sure that next time they order enough of the right sort of clothes.
And, you know, this was a 600p stock 5 years or so ago. It's 330 odd p now. I was surprised to see that it's actually up year to date and is actually outperforming the broader market. A lot of this in the price, presumably, then already?
Yeah, a lot of this is in the price. Forecasts have been coming down over the last few weeks. A lot of analysts have become increasingly bearish about it, so a lot of this is priced in. The shares rose sort of towards the start of the year. They've been declining more recently. So yes, a lot of the bad news is in the share price. They trade now on about 10 times earnings, which is more or less level with the likes of Debenhams, but a lot below ASOS, which is the other interesting piece of news today. This is the online fashion retailer, appeals to a much younger market. Its shares are up very strongly today, about 8% or so. Shares trade on 33 times earnings. It's a big rating, but it's a very impressive performer.
And there's a real philosophical question here, isn't there? Because every time M&S misses and restructures, people ask the question, you know, what is it? What's it trying to be? How does this fit into that long-run narrative? Well,
it doesn't answer the question very much. It's trying to be a little bit of everything. Their tagline at the moment says an awful lot. Only at your M&S. They're trying to appeal to everybody's kind of desires. So they've got the clothing business where they're not doing so well on that. They've got the food business in the UK. That's the other big part here. That's doing a bit better. Sales only just growing there, but they are showing some growth, and it should be even more growth later in the year as the benefits of a store refit program come through. They're also expanding quite heavily, particularly in China and India, so we should start to see the fruits of that.
Well, thanks very much for that. No doubt there'll be a recovery phase, and we'll be sitting here talking about another miss in 5 to 10 years' time. Yeah. Thanks very much, Oliver.